Today, we are going to have a battle of the titans, a steel cage match between Tesla and Apple. Who will survive the market crash and who will die? We will answer that right now. What is going on, and welcome back. This battle is about which company will perform the best in the current downturn. Comment down below with your predictions. And if you like to make money in stocks like Tesla and Apple, or you just like watching steel cage matches with stocks, please go ahead and subscribe, hit that notifications bell, and while you're down there, go ahead and give the video a like as well. There are too many factors we can look at, but no one wants to watch me for that long, especially me. So for this competition, we're going to look at 3 factors, one for each round. Round number 1 is going to be the products that each company sells. Round number 2 is going to be the CEOs of each company. And round number 3 is going to be the finances of each company. Both companies are incredible market leaders. They have crazy loyal and devoted fan bases and have vastly superior products to their direct competition. But there can only be one winner. Two companies enter the cage, but only one company leaves. I think that's actually in a movie, isn't it? I hope I don't get a copyright strike for that. Round number 1, products. For Apple, we're going to talk about the iPhones and the services Apple offers. They do a lot more than that, but the iPhone and their services are the top 2 revenue generators, with the iPhone making up roughly 70% of their revenue, and their services like apps, music, cloud services making up about 10% of the total revenue. The iPhone completely changed the phone game. iPhone was light years ahead of its competition. If you're old enough, you'll remember when Nokia and BlackBerry were the big players, and then the iPhone hit. It completely destroyed those companies, and they never caught back up due to the iPhone being so far advanced. And for Tesla, we're going to discuss their vehicles. Tesla is involved in so many other things right now, but vehicles make up about 94% of their total revenue, so we're going to stick with that. Tesla's vehicles are growing rapidly, like we've never seen before in a car company. Just like the iPhone, Tesla completely upended all the big players in the market. As a matter of fact, they upended it so much that competitors are finally having to admit that Tesla is light years ahead in regards to the EV technology. We will probably look back 10 years from now and view it the same way we view the iPhone right now. Both companies have incredible products, but there can only be one winner of this round. And the winner of round 1 is Apple. Wait. Before you guys get all riled up, I know I'm going to get a lot of hate from my Tesla followers, but remember there are still 2 more rounds to go. If your phone died tomorrow, would you buy another one? Of course you would. Phones have become non-negotiable and people will continue to buy them even in a downturn. A car is also a non-negotiable for most people, but you are far less likely to upgrade during a downturn. As a matter of fact, car companies needed a bailout to survive last time. Tesla's financials are way better than the automakers that got bailouts. But in a downturn, you're still more apt to just fix your car and wait versus upgrading. Second, since it looks more inevitable, people will be staying at home a lot more. They're a lot more apt to buy services like music and movies because they're home and it's cheap entertainment. Buying a Tesla is not the same $5 treat like a movie or music is. And in certain financial times, people will pay to escape for a few hours, but are far less likely to pay $40,000 or more on anything during a downturn. So that pushed Apple ahead in this round. Round number 2, the CEOs. For Apple, we have Tim Cook. He was given the unenviable task of following up the great Steve Jobs just shortly after his death. Given the difficult circumstance he took the job under, he has performed remarkably well. He has transitioned the company into maturity, growing it into one of the pillars of the financial market, and he continues to push Apple into new revenue streams, much like Elon has. Can we say Apple Car? And now we will move over to Tesla's Elon Musk, their enigmatic founder and head honcho. He is bold, unconventional, and despite his many quirks and weird interviews, he is super intelligent. I think he's secretly laughing at all of us when we think we are laughing at him. He has brought Tesla from a pipe dream to a reality in an incredibly short period of time. And he has an incredible vision for the company, laying in inroads on everything from manufacturing to solar, and creating more streams of income that work synergistically together and are simultaneously so diversified that in time, it'll be hard to remember when Tesla was actually just a car company. Winner of round number 2, Tesla CEO Elon Musk. Come on, during times like these, a visionary like Elon who doesn't seem to care about boards or shareholders' whims is the guy you want navigating really uncertain waters. He is the perfect guy to recognize an opportunity or pivot to take advantage of some anomaly or just simply to avoid a disaster that pops up out of nowhere. He is going to continue pushing forward regardless of what's going on. He's also going to continue to push the growth of the company as opposed to just toting the corporate line and hunkering down for the storm. So we are tied 1-1 going into the final round. Now just remember, this is my opinion on how they are going to hold up in a significant downturn. If you would like to see me compare the two in a different circumstance, maybe something like who will be better off 10 years from now, or which stock will make you the most money in 5 years, well, go ahead and like the video first and comment down below with what you want to see, and I'll make another battle between these two stocks. Or if there's any other stocks you want to see battle, put that down below as well. Round number 3, finances. I'll try not to nerd out too much on this, but finances are an important piece of the equation for a company during a downturn. How are they positioned financially? Apple has a strong balance sheet. Cash on hand is an astonishing $100 billion plus. That's up 51% from the prior year. But total assets were down from $365 billion to $338 billion. They also decreased their liabilities from $258 billion down to $248 billion. But that number is still higher than it was the previous 4 years. Tesla also has a strong balance sheet. Cash on hand is over $6 billion, with an additional $2 billion being made available to them after that stock offering they did just before the downturn. Brilliant move to get more capital. So we'll just call it $8 billion. Total assets of $34 billion, that's up 17% from the year prior. But liabilities were also up 13% to $26 billion. Assets are still outpacing liabilities, which is excellent. So the winner of round 3 and the cage match is Apple. In the end, Apple's cash position is just too much for Tesla to overcome. They also have a more mature product base, a larger customer base, and overall a more accessible product lineup that pushed Apple over the top in this comparison. Add in the fact that they've already been through the Great Recession and know exactly how to thrive in that environment, and the ride should be much smoother for them. And hey, this was all about surviving the cage anyways. So comment down below and tell me what you think. Do you agree, disagree, and why? And don't forget to subscribe, hit that little notifications bell, and like the video, even if you disagree. It lets YouTube and me know that you want to see more of this. And as always, if you're thinking about buying either one of these stocks, I trade exclusively on Webull, so use the link down in the description. Thanks.